Hi there, thanks for coming back to the channel. My name is Mike Pitt. I make videos about marketing, business and crypto so you can grow your business, increase your profits and increase the size of your portfolios. Okay, the title for today's video is what's the problem with DeFi? Keep watching and I'll give you my thoughts. Let's do the housekeeping before I get into the main content of the video. So I'll put my links to my socials on the screen now. It's on the other side actually, on this side. So take note of those, click there and follow me, send me messages. I'd be happy to communicate with you via all of those platforms. It's come to my attention, I'm going to put a visual on screen now, that not everybody who's watching is subscribed. So you can see that there are still quite a few of you not subscribed. If you're finding value in these videos, this video or any of the other videos on my channel, please subscribe. Right, DeFi. I need to give you an explanation of what DeFi is. DeFi is very popular in cryptocurrency circles at the moment and has been for a couple of years now. So probably since 2019, 2020. And it stands for Decentralized Finance. Decentralized finance. The theme of centralization and decentralization is something that I'll mention many times on this channel. But what you need to understand is centralized finance is the traditional banking structure, global banking structure and finance structure that we're all aware of. So I'm in London, I'm based in the UK, so I'm familiar with the Bank of England. In America, you have the Federal Reserve. These are central banks that regulate and I don't want to get into too much detail because it varies by central bank, but in some cases these central banks regulate the interest rates and have control, and they do take some influence and input from the governments of their respective nations. So there's largely the centralized banking system is controlled by a few people. Decentralized, as the name suggests, is not controlled by a few people. It's not regulated by a few powerful people who have all the power, essentially. Decentralized means there are other ways of the system operating. Let's use the example of Bitcoin. So Bitcoin is not controlled by any government. Many governments have seen the rise of Bitcoin. Initially, this was under the radar when it was founded in 2009, as many of you will know. Governments have tried to control Bitcoin, tried to banish Bitcoin, ban Bitcoin, tried to have influence over it, but it's all been remained independent, and transactions on the blockchain for Bitcoin are independently verified by 15 different checks, if you like, on the system, on the blockchain, and it's not by a government. There's no headquarters. It's not centralized. There's no headquarters for Bitcoin in New York or headquarters for Bitcoin in London. It's decentralized. So the idea of decentralization, taking the power from just a few people and giving it to nobody and giving it to the system, I'm all for that. That sounds very positive and progressive, and power to the people. We like power to the people because it means that it's more, it should be a fairer system and not controlled by the 1%. The 1% seem to control everything, all the systems, all of these billionaires that control all these systems all over the world. Now, I don't want to go off on a tangent. I just want to explain what decentralization means. So decentralized finance means instead of the central banks controlling it, the blockchain controls the operation of decentralized finance. And in theory, that's a very good and progressive step. Obviously, governments may take a different perspective and may not like that, but that's the idea behind decentralized finance. As I say, there are some very positive sentiment and very positive feelings about that. But the problem is, or one of the key problems that we're going to discuss in this video, is that decentralized finance means that, and there's no legislation, think about this, there's no legislation controlling how people operate within decentralized finance. What does that mean? You know, it's positives and negatives again. So nobody's in overall control. Nobody's regulating it, so it's a bit like the Wild West in many ways. Okay, so what are the problems with that? Decentralized projects can be created without a lot of the normal rigors and checks and validations being carried out. So there can be projects, and this is what I've seen, and this is why I'm making the video, and this is why I want you to be aware. There are lots of projects that offer very high APYs, and if you haven't watched my other videos, just to remind you, APY is annual percentage yield, and that's the amount of interest you can earn by putting your crypto into the project to help them execute transactions and validate transactions on their blockchain, and also it could be to increase their liquidity pool. So you put your cryptocurrency into the project, and you're enticed, and enticed is the right word, please, because you're enticed by annual percentage yields of 5,000%, 6,000%, 7,000%. And with these kinds of percentages, you don't need to be a genius in cryptocurrency investing. You just put your money in, it's going up 7,000%. Whoa! Everybody's a genius in that environment, because your money is going to grow very quickly. The downside of that is there are no guarantees, there's no checks, there's no auditors, there's no regulators. You're not sure whether it's a genuine project and has real use cases, i.e. is it making some technological advancement, and on the basis of that they're making gains and the value of the coins are going up, the value of the project is going up. Is it, or is it just, it seems to be lots of money is going in because people have seen this amazing interest rate, annual percentage yield of 5,000, 6,000, 7,000. So everybody's piling into the project. They don't really know what the project's about. And if I don't know if your parents ever told you this, but you know, if something looks too good to be true, it often is too good to be true. And what's happened in many projects, and Wonderland is a good example of this, is that the project is not run as professionally as, and that's an understatement. So what's happened with the Wonderland project is that it's come to light that one of the key, the treasury, I think the treasurer, the chief treasurer, is a convicted felon who's been convicted for fraud, and money has been convicted basically for stealing money in other projects, and he's the treasurer for Wonderland. So Wonderland has now lost a lot of confidence of investors. The price of the project has gone down. So people who piled in, let's say $50,000, have lost lots of that, because lots of that investment, because their original investment was obviously vulnerable, and maybe has been lost completely. The value of the coin has gone down, and they don't know whether they're going to get any more ongoing interest rates, or they don't know if they're going to get their original money back. And that's the problem with decentralized finance. Lots of these projects, if you compare them to, and I made a video about staking, and in that I talked about the Binance platform and the staking percentages available there. I'll put a screenshot to that video. If you haven't watched that, watch that. But the staking percentages tend to be, let's say, between maybe 5%, 10%, 20%, 25%. That's about possibly as high as they go in terms of regular staking projects. But the level of risk is lower than if you pile your money or put your money into decentralized finance projects that are offering 8,000, 5,000, 8,000 APY, which is unbelievable. And the reason it's unbelievable is because the projects aren't genuine. They can turn into being what is called in the industry a rug pull, and that's when investors' money, the founders or the creators of the coin and the project, disappear with investors' money. That's called a rug pull. And that might be because there's not really any real use case. They're just collecting money, and then they have built some technical means, and there's lots of different ways that they can do this. They built a technical route for them to be able to collect the money. In some cases, people aren't allowed to sell the coins because they're prevented from selling the coins. They take the coins and they sell. Only the creators of the coins sell, and that's called a rug pull. They've disappeared with the money, and investors have not received what they thought they were going to receive. So that's the danger of decentralized finance. I like to make very positive videos about crypto on my channel, but I just wanted to let you know that there are some areas that are even more risk than so let's say the top tier cryptos. So if you're investing in Bitcoin and you're investing in Ethereum, for example, there's a lower level of risk in my assessment. This is not financial advice. There's a lower level of risk than if you're investing in decentralized finance. If you're investing in decentralized finance, you've got to be prepared for the eventuality that your money's gone. You never get your money back, and you don't get the interest rates they promised, because it's a lie. They were collecting your money in and then they were going to disappear with the money. And that, as I say, that's known as a rug pull. So have you considered any decentralized finance projects? If you have, please let me know in the comments below. If you've had experience of a decentralized project, and you don't mind sharing your story, pop that in the comments and maybe we can talk about that in the next video. But I wanted you to be aware, because if you're following me on this journey as I make more content around crypto, and I'm showing you some of the moves that I'm making and some of the moves I'm not making, so I wanted you to be aware so that you don't make that mistake. Lots of people have made that mistake. There's lots of YouTubers talking about how much they're making on decentralized finance projects, 5,000 a day, we're making 8,000 a month, 20,000 a month. Some of them are making that, and some of them have got into the projects early, and maybe they exited it early as well. But lots of people are putting their money in and losing their money. So I don't want you to be one of those people. Thanks for watching all the way through. This has been a different video. I've just talked about an area that I want you to be very cautious about, and it's not an area that I've gone into because for the reasons that I've explained in the video. So I hope this video has been useful to you. If you've liked this video, please give me a like. Click on one of the two thumbnails that will come up, and to watch another video. I look forward to speaking to you next time. Thanks. Bye bye.